Hello and welcome to Business Television India. I am Vijay Ganeshan Iyer. Today we have with us a big global voice who joins us on the show to get a global perspective on Indian markets and what is in store when it comes to the Indian markets for the global biggies. We are joined by Stephen Birch, President of William O'Neill. Stephen, welcome to India and thanks for joining BTVi. To begin with, I would ask you, we clearly are witnessing a market rally in the last couple of days post the general election dates were declared over the weekend. Somewhere we are getting a sense that, of course, always the markets are ahead of the curve, that global players and the FPIs clearly are betting on India once again, and clearly perhaps a sense that Modi would be back for a second term?
Yes, Vijay, thanks for having me. The market went through a deep correction, and it's come back quite a bit. We're within maybe 5% of our highs on the Nifty 50. And I just returned from a trip. I was in London last week visiting with some of my international clients. And we saw some of the inflows where there wasn't much FII inflow in January, a lot in February. But talking to clients last week, there was some concern about the election. So many of the clients were underweighting their exposure to India, really waiting to see what this election would produce. Now, in the meanwhile, as you noted, the market has been rallying. The market is discounting what they think this outcome may be, which is probably the incumbent government remaining in power. So it's very interesting times to sort of watch how those large institutions that have been underweight now are feeling a little bit behind the curve, and they're probably deploying some capital right now as they see some strength come into this market.
Stephen, I'm asking you, interestingly, as you are saying the way markets have behaved and taken the cues maybe in the last week or so, close to 4 to 5 billion are pumped into India, perhaps if you see from mid-Feb till now.
Right.
Do you see this as a broad-based rally, and clearly value picking is going on, and clearly a lot of depth still available when it comes to the best picks at the current PEs that we are witnessing?
Yes, no, that's a good point. When markets go through corrections, that performs a function. That really takes some of the high-valued stocks, the high multiple stocks down to more reasonable levels. So there are certainly names in the small and mid-cap space that got hurt the most, that from a valuation perspective, they're not dirt cheap, they're not really, really cheap, but they still look much more attractive than they might have maybe 4 or 5 months ago. There is good merchandise out there. Our company, William O'Neill, is known for growth stock investing across the world. In the Indian market, I was talking to a colleague the other day, in India, in Asia in general, in India and China, we have just such a great selection of true growth names that are growing at 15, 20, 25%. So we advise our clients to really go back, instead of trying to just buy a story or a name or something off a rumor, look at their earnings record, look at their ability to generate top-line growth of at least 25%, earnings growth of at least 25%, expanding margins. And there are many names in this market that look very, very attractive. Compressed valuations, the charts, the technical patterns that we look at when we look at these names do not look broken. These stocks sold off in a normal correction and they've come back just slightly, and they're very buyable. Some names look a little extended, some look like they're, I was looking at Asian Paints, I was looking at some others. Some people might find the valuations are still too high and the stocks are just too expensive. But in a great growth market, if this really resolves itself to become a good bull market, valuations will start to expand again. And we don't really know. I think the big issue that has to get resolved is the election.
Stephen, if I could ask you, yes, May 23rd is, I'm sure you and all your clients globally would be looking for the date when the election results will be out. When you speak to your clients, when it comes to India, primarily it's been a consumption-driven story that we are seeing, with the middle class base growing rapidly, perhaps on a year-on-year basis, and that would continue going forward. So do you see primarily any specific sectors, or particularly the consumption-driven sectors doing well? Particularly we are seeing finances once again, a sector where a lot of money is being pumped in or stocks being bought, so that would continue?
Yeah, the bank stocks look interesting. They've come back. Some of the infrastructure we're looking at, not all of them. There were some cement companies that looked of interest. We continue to think it is going to be consumption-driven for the next 5 years at least. We were just talking earlier about the number of young people that are eligible to vote in this upcoming election. the demographic in both China and India is so strong and so powerful that for a longer-term growth-oriented investor, you really have to pay attention. So yeah, we like names that have some exposure. One name that we were looking at was a footwear retail, Bata. Was an interesting stock that looked, very fragmented market. They're consolidating. They've got expanding margins, good growth ahead of them. So India still has a fascinating growth story to the international investor. It's less of an emerging market. It's really getting more in sync with most of the global markets. We really are a global economy. The correction, the sell-off in October was so, it can happen in any market. It really is a reflection of sort of human behavior, when people get nervous and they panic. But if the underlying fundamentals and the interest rate policy in the government, and if regulation is pro-business, there will be good growth. There will be companies that really enjoy that, and you'll see it in their numbers. You'll see it in the revenue and the earnings numbers, and that's what we like to look for.
Stephen, as you're rightly pointing, of course, election is something that everyone keeping a close watch. But other than on the macro level, where do you see the primary challenges? Crude always is one thing that Indian markets come in with your own challenges, because we all know the moment crude starts a northward climb, things get jittery out here. Reforms, on the other hand, a lot have been done. The debate is still on. GST. Do you see perhaps many of the reforms that were undertaken in the last 3 to 5 years, the best of the results are yet to be seen, and thereby perhaps the challenges are limited and the upside is, you have more upside? I think
there's more upside. I think there was some concern over what was the impact of demonetization. Did it really do what we wanted it to do? GST is a new, there's always, when you implement a new policy, there's always lots of discussion over its effectiveness. The fact that we're through all that, I think there is more upside. I think the real concern is some of the reform policies that are being fronted by some parties that are, we know we can't afford and can't pay for. This is actually occurring both in India and in the U.S. The U.S. election is a little further away, but they're already starting to talk about various reforms in the U.S., Medicare reform, in India, universal income. All these, there are certain policies that I think the market, if they really thought there was a high likelihood of those occurring, we would see it in the way the market trades. Now, the market's trading very strong, both in the U.S. and in India, so I think the consensus wisdom of all the investors that are out there buying and selling today is one that's very optimistic and very positive. We think the incumbent governments, both in the U.S. and India, will stay in play. We think there's going to be less regulation or more pro-business regulation to encourage innovators and entrepreneurs, and that's good. That's kind of our view as it stands today. But as you mentioned, there are going to be lots of activity here in the next 2 months. It's going to be very, very interesting to see how this election unfolds. And globally, where do you see the challenges? China, US, the trade war, although the temperatures are down, but still no clarity on which way things head. Geopolitical tensions is something that still is keeps happening at regular intervals. So globally, do you see China, US trade war settling down, or an understanding would be the best thing that could happen globally? And particularly, we also need to consider the way Brexit is going to pan out. Yeah, I think the trade war definitely is of concern. And every time we get news that they're coming to some conclusion, the market in the U.S. will rally, and you'll see even in China the market will rally. And it's very news-driven. When we don't hear news, everyone gets nervous that maybe it's going to fall apart. I think President Trump has been clear that he is looking for a deal. He is a deal maker. Many in his administration have been on the news talking about it's a very complex negotiation. Both sides would like to resolve it. And that's what happens when you get involved in two big countries. They're getting into the details. I think it's going to get resolved. I think the market is already expecting that and sort of discounting that. That's why we've seen some strength in the U.S. With regards to Brexit is, having been in London last week, it's still in the news, it's still a concern, there's all this hand-wringing, but that story is sort of worn out. I mean, it's going to happen. There are going to be implications. It's going to slow the economy down. They have to get adjusted to this new reality. But that too will get pushed aside. I think that push aside meaning in terms of investors won't be focusing on that issue, and they're going to go back to the basics. Do we have good interest rate policy? Do we have good regulation? Are people being encouraged to start businesses in these countries? In Europe, it's an issue. In Europe, there is a lot of regulation, probably too much regulation. When we come into countries like India, when we come into the U.S. or even look at China, when they make overtures to deregulate or open up their markets, it's very, very bullish. But they have to do it in a way where, you know, it's on a level playing field and they involve everyone and there's a fair discussion. So longer term, no, I'm very, very optimistic on Asia in general.
Stephen, quickly, 30 seconds, if you're going to tell your clients, India going forward, if they are underweight, would be overweight?
I would be overweight India. I think it's the perfect time right now to be overweight India.
That is Stephen, the big global voice, which clearly is saying May 23rd is one date that perhaps all the global big investors are keeping a close watch on, and clearly India going forward would be overweight, and also as always the markets are sensing that perhaps Modi will be back for a second term. Hope you enjoyed this special edition with the global CEO of O'Neill on BTVi.